Good morning, everyone. So today is our last session on Ind AS 101. We have covered quite a substantial number of provisions as far as the standard work was concerned. So Ind AS 101 is a standard that helps entities to transition from the earlier gap, whatever they were using, to the Ind AS regime. So that is the uh, reason why Ind AS 101 was formulated. It gives you the benefits of certain proxies, of certain surrogate values, certain exemptions below, you call it as exceptions, relief, whatever it is. Ind AS 101 provides that to ensure that your transition from gap to Ind AS, the efforts to some extent get minimized. So in our previous two sessions, what we have seen is we have covered uh, the overall mechanism of transition, where the effects or the adjustments typically go to retained earnings or any other reserves if it is possible. Generally, it's retained earnings. And then we saw certain specific cases of transition. We started off with ESOPs. After ESOPs, we moved on to foreign exchange translation. Then after Forex translation, we moved on to after foreign exchange translation, we moved on to property, plant and equipment. From property, plant and equipment, we then transitioned to business combinations, joint ventures, compound financial instruments. So these were the items that we have already covered in the previous sessions. We saw a lot of questions as far as these topics were concerned, and we have seen the treatment, how it is dealt with. Today, we have two very small treatments or two very small transition adjustments to be dealt with. And then we will be continuing with questions that we need to solve, okay, for giving you certain practice. And then we close up with certain MCQs for the day, okay. So coming to the next part, we've already seen this as part of yesterday's adjustment when we were doing government grants, but as a formal standalone clause, we haven't seen that. So this is your next one. I think this would be number 7. Loan from government. Or what we call government assistance, government loans. Okay. So if you recollect yesterday when we did the question, there was a VAT deferral loan of 60 lakhs having a present value of 37 and odd lakhs. So what we did was we treated that as the loan amount, recognized at EIR, and then we moved on to recognize the balance as a deferred government grant. So that is the same thing that we will be just noting it down for our reference. Okay. So government loans, typically, these have two treatments which are permitted. Okay. You have one prospective application and you have another one retrospective restatement, right? You have another one as retrospective restatement. Okay. Now, normally when government gives loans at ultra low rates of interest, right? These would be loans which extend for a very long tenure, 15 years, 20 years, 25 years. Okay. So these loans extend for a long period of time because the objective of the government is not to give a loan and earn income out of it. The objective of the government is to give assistance so that entities are encouraged to come and set up their units in whatever be the location. It could be an industrially backward area, It could be to promote employment in a particular place. Okay, so all these entities, like you have Unilever, which has set up its units in far northeast, okay, where industrial development is typically low. So all these kind of things, the government tries to promote industrialization, employment, but organizations do not see the benefits. So to attract them, they give these kind of things. Now, when you have a loan that extends for something like 20, 25, 30 years, and the rate of interest is, 1%, 0.5%, clearly it is not at fair value. Clearly, it is not at fair value because the objective is something else. So now, what compound financial instruments yesterday, what we saw, we have to state it at fair value. That was what we did with the VAT deferral account, right? 60 lakhs was the deferral, 37 lakhs was the fair value. We recognize the loan at fair value. But for a loan which extends for 25, 30, 35 years, there is no comparable information available for arriving at the EIR. Normally, your bonds range for maximum 10 years. Okay, your bonds go for 10 years. Beyond that, generally, you will not find comparable data across. You will not find comparable data across. Now, because of this, what you can say, because of this absence of information, the standard gives you an option. Ind AS 101 gives you an option to treat it as a prospective application, to treat it as a prospective treatment and recognize it at the previous gap value itself. This is possible only when you do not have the EIR, which is generally the case. Okay. So here you have an option of prospective application. That means continue to recognize the loan as a financial liability, or of course, if it is in the nature of equity, you recognize it as equity as per previous gap value. The fallout of this is grant is not recognized for the benefit arising due to below market rate of interest. Are you okay with this, Sanjay? Yes?
Yes.
That
Yes.
means whatever is the balance, you just bring it forward. No adjustments, no split accounting as per Ind AS 2109, no fair valuation, nothing. Straight whatever is there in the gap financials, that will come in your Ind AS financials. If I talk about retrospective restatement, if information is available retrospectively, restate the value based on facts at the time of initial accounting of the loan. So if you have a loan that is for 5 years, 7 years, this data is readily available. So at this point of time, you look at the EIR, determine the EIR on the date of original awarding of the loan, go back in time, prepare the amortization table up to the date of transition, and that will be your figures that you would be considering for the purposes of Ind AS 101 and subsequent Ind AS accounting. We had done this for financial instruments also. We went back in time when the original financial instrument was recognized. We arrived at the EIR, the fair value, and the equity component. We prepared a 2-year amortization table in our example to arrive at the value on the date of transition, which was considered for Ind AS 101. Yes or no?
Yes.
So same thing, you will have to do it here. Okay, same thing, you will have to do it here. Okay. I'm not giving any example because we have already seen this, right? Yes?
Yes.
Or you want a small example? We'll take up a small case. Example. Loan. $10,000. Market rate of interest 10%. Coupon 2%. Tenure 5 years. Is this loan at fair value? Answer is no, because when the coupon is 2 and market rate is 10, it is not at fair value. You will have to bring at fair value. But under AS, do I have a concept of fair valuation of a liability? Answer is no. So loan would be recognized at how much? 10,000. This would be
10,000.
under AS. In Ind AS, आप क्या करोगे? Fair value of loan is equal to 10,000 into 2% into 3.79. This is present value annuity factor, 10% for 5 years. Yes or no?
Yes.
Plus, you will pay the loan at the end. So 10,000 into 0.621. This is present value factor, 10% 5th year. So this comes to how much?
$6,968.
1 second. $6,968. So what is the entry? Bank debit, you would have received 10,000 to loan 6,968 to deferred government grant. कितना होगा? 3032. And you will account for it depending on the nature of the grant. Is it okay?
Yes.
Yeah. So quite simple as far as your example is concerned. Nothing major. So that was 7. Noted it down? Yeah.
Yes. Yes.
Okay, fine. Chalo. So we move on to the next one. That is 8. Accounting.
We did not prepare this amortization table in this case.
वो सिर्फ आपको example के लिए है. So now you know. Now I have not given for which date, na? So this is on initial recognition of the grant. Suppose you're transitioning after 3 years. Then you will state the loan at 6,968 plus whatever be the interest that you accrue on EIR minus whatever coupon you are paying. Okay? ये तो सिर्फ
Right.
this is for you to understand that this is the split that will happen. This is exactly what we did in the VAT deferral thing. Okay?
Yes.
तो VAT
Right.
deferral में क्या हुआ था? 31st March का डेटा था and we were converting on the very next day. So that is why there was no need to prepare an amortization table. Here also, assuming if the conversion happens the immediate next day, this is the data that will flow. If it is happening after 2 years, you will have to amortize the loan. And you will have to take the deferred grant also. If it is a revenue grant, you will have to proportionately recognize as income over the tenure of the grant. Okay, so depending on that, you will do the adjustment. Okay. ठीक है?
Yes. Yes, right.
Okay. So coming to accounting estimates, this is your last adjustment item as far as 101 for you is concerned. Okay. So let us consider a case. We'll take an example. You have made a bad debt provision. Okay. Transition year, let us suppose it is 2022-23. Okay. If this is the year, what will be your date of transition? 1/4/21, right?
21 days.
22-23 is your year of Ind AS. 21-22 will be your previous year restated, and earliest period will be 1st April 2021. Now, you have made an estimate made on 31st March 2021. Yes, आपने कोई estimate किया होगा. Let us suppose you have made an estimate made on 31st March 2021 for rupees 2 lakhs. Okay. You thought that 2 lakh worth of my trade receivables will not be received. So you made a provision for rupees 2 lakhs. ये कब बनाया आपने? 2021 March. That means on the date of transition, on 1st April 2021, your provision for doubtful debts would be rupees 2 lakhs. Correct? Yes?
Yes. Yes.
Now, आप कब transition कर रहे हो? You are transitioning in the year 2022-23, right?
Yes.
Now, when I'm doing 22-23 transition, I have to prepare a comparable for 2021-22. Yes?
Yes.
21-22 will be an AS related balance sheet P&L, or it will be an Ind AS related balance sheet P&L when I transition.
In Ind AS.
Matlab, you are basically going to restate this, right?
Yes.
21-22 would already be an AS based P&L, AS based balance sheet. Now you will restate it to make it an Ind AS based balance sheet. Yes?
Yes.
Now, suppose 31st March 21, you made a provision for 2 lakhs. Very nice. You did the accounting for 21-22 also based on that. What happened is in 21-22, you would have, suppose, actual bad debt in 21-22. Let us suppose it is rupees 3,50,000. Okay. See, when you made a provision on 31st March 2021, did you know you will lose 3,50,000?
No.
No. तो उस टाइम पे आपका 2 लाख का प्रोविजन वैलिड था. It was a valid provision. Is there anything wrong when your actual becomes 3,50,000 compared to an estimate of 2 lakhs from an accounting perspective?
No, nothing wrong.
No, estimates are bound to change. Estimates are bound to change. It's absolutely natural. वो same नहीं हो सकता. So 3,50,000 is your actual bad debt that has happened. Now, how would you have treated this in 21-22 under AS? You would have taken an additional hit of 1,50,000. Yes or no?
Yes.
Taking it to be a change in estimate. See, I have taken a hit of 2 lakhs in 2021. recognize the provision. My actual bad debt is 3,50,000. Again, 350, 2 lakh provision is already there. So I will meet 2 lakh from the provision. And because I have not made a provision of 1.5 lakh, I will make an additional provision of 1.5 lakh. Are we okay with this?
Yes.
Yes or no?
Yes, yes.
Okay. So this was what has happened. And in 21-22, you have taken it as a change in estimate and you have done the adjustment. Okay. Now, I am in 2022-23. Correct? Here I am preparing Ind AS financials. Yes or no? Now,
Yes.
I will be preparing 21-22 financials. This will be restated to Ind AS. Yes. And I will also be preparing an opening balance position on 1st April 2021. Yes or no?
Yes.
Opening. Now, understand. Understand the question, you can give me your answer. In 2022-23, am I aware that I have lost 3,50,000 rupees? 2022, in this year, am I already aware that there is a bad debt of 3,50,000?
Yes.
आपको पता है. You know that this is relating to a period of 2021 financial year ending. Okay, 2020-21. Yes, because the provision was made for 2 lakhs as on 31st March 21 means the trade receivables existed as on 31st March 21. Yes or no?
Yes.
That means, now look at my question. Can I say that on 1st April 21, instead of the provision that I estimated of 2 lakhs, can I say that my estimate, I am changing it to 3,50,000 provision for doubtful debts? Can I make this estimate change in the opening balance sheet of 1/4/21?
Yes.
Yes. Okay. Why? Because I have information right now. Yes or no?
Yes.
But it does not work like that. See, the movement from 2 lakhs to 3,50,000, which you now want to recognize as an opening balance transition adjustment. Yes or no?
Yes.
This movement from 2 lakh to 3,50,000, is it because of an Ind AS application? Is it because of, in Ind AS, we do 4 things, right? What are the 4 things? We recognize what needs to be recognized under Ind AS, which was not recognized under AS. We de-recognize any item which was there in AS but not required to be in AS. We do a reclassification. And last one is we do measurement as per Ind AS. Correct? These are the 4 things that we do. Yes or no?
Yes.
Now, when 2 lakh is becoming 3,50,000, does it fall in any of these 4 criteria?
No.
What it is? It is an information that is available to me because of passage of time. Yes or no?
Yes.
मैं रीस्टेट कर रहा हूं 2 साल बाद, तो मुझे ऑब्वियसली इंफॉर्मेशन है मेरे पास. बट दिस चेंज is happening only because of availability of information and not because of any Ind AS related adjustment. इसको हम लोग बोलते हैं hindsight bias. क्या बोलते हैं? What do we call it as? Hindsight bias or benefit of hindsight. Yes or no? Correct? Many times businesses take a decision and after some years they come to know that the decision should not have been taken. उसको हम लोग क्या बोलते हैं? वी कॉल इट एज अ बेनिफिट ऑफ हाइंडसाइट. बेनिफिट ऑफ हाइंडसाइट्स cannot be recognized as Ind AS adjustments. Okay? Because there is nothing under the Ind AS framework that is prompting this change. It is only because you have additional facts coming into the picture. Yes or no?
Yes.
Yes. So therefore, this transition is not acceptable. This transition is not acceptable. You will continue to recognize 2 lakh as provision for bad debts on 1st April 2021. You will continue to recognize 1,50,000 as an expense for 21-22. Are you able to understand?
Yes. Yes.
Yes. Okay. If I do the hindsight adjustment, that 1,50,000 which is hitting the P&L in 21-22, it would go and get captured in retained earnings on 1st April 2021. Yes or no? Yeah. If I had to take 3,50,000 instead of 2 lakh, that 1,50,000 it would hit the retained earnings, which is incorrect. Items will go in retained earnings only because of remeasurement issues. This is a benefit of hindsight. We cannot give a benefit of hindsight. We cannot give a benefit of hindsight. Are we okay with this? Yes? Okay, fine.
Yes.
So, estimates required by previous gap. Okay. Yes. No. If an estimate is required by previous gap, is there any evidence of error? No. Yes. If there is no evidence of error, the next question that you need to ask is, no. Consistent with Ind AS. Is it consistent with Ind AS? No. Yes. If it is consistent with Ind AS, in our example, the 2 lakh rupees, use previous estimate. Are you okay with this?
Yes.
Acha. If it is not consistent with Ind AS, use previous estimate and adjust to reflect Ind AS. Are you okay with this? Yes or no?
What is this? Adjust to reflect Ind AS?
मतलब जो भी whatever is required under Ind AS, you do that adjustment. Okay, we start off with the previous adjustment. We do the treatment that is required under Ind AS and take that as the fresh estimate. Is it okay? The
Okay.
differential will go to retained earnings. Okay.
Yes. Okay. Okay.
Same treatment, no difference. Okay. All right. Fine. If there is an evidence of error, then make an estimate reflecting the conditions at the relevant date. Okay, make an estimate reflecting the conditions at the relevant date. And same thing applies to this also. If you need to make any adjustment, please do it as per this. If there was no estimate required under previous gap, but you need one right now, then make an estimate reflecting the conditions at the relevant date without hindsight bias. That means you will have to go in time, go back in time, analyze the conditions existing at that point of time and make an estimate. Do not look at the facts arising after that date and make an estimate. Are we okay with this?
Yes.
Okay, so this is as far as your estimates are concerned. You have noted it down?
Yes. Yes.
All right. So that takes care of the theoretical portion of our standard. We have concluded Ind AS 101 in terms of theory. Okay, so we do a couple of questions to just keep familiarity with whatever we have done. Achha, yesterday's question, could you prepare the balance sheet?
No.
You would want to prepare the balance sheet, or we proceed with the questions? Maybe then at the end of today's class, we will see the balance sheet. Okay, all right, fine. Let us come to illustration 16 was done. Illustration 17. Okay. Again. Important one. Shaurya Limited is the company having its corporate and registered office at New Delhi. 60% of Shaurya Limited's shares are held by the government of India and the rest by other investors. This is the first time that Shaurya Limited would be applying Ind AS for preparation of its financials for the current year 3-4. Following balance sheet is prepared as per earlier gap as at the beginning of the preceding period along with additional information. So X3, X4 is your year of transition. So comparative will be X2, X3 and earliest period is beginning of the earliest period would be 1st April X2. So they have given you the balance sheet as at 31st March X2. So your date of transition would essentially be 1st April 20X2. For all practical purpose, this is the balance sheet. You are given equity and liabilities 10 lakhs, reserves and surplus 25 lakhs, long-term borrowings 4 lakh 50, long-term provisions 3 lakh 50, DTL 3 lakh 50, current liabilities 22 lakhs, other current liabilities 4 lakh 50, short-term provisions 12 lakhs, total is 85 lakhs. Are we okay with this?
Yes. Okay.
Moving on. Non-current assets, you have property, plant, equipment, intangible assets, goodwill, non-current investments, long-term loans and advances, other non-current assets. Current assets, you have investments, inventories, trade receivables, cash bank, and other current assets. Additional information, all figures continue to be in thousands. Other current liabilities include 3,90,000 worth of liabilities to be paid in cash, such as expenses payable, salary payable, etc. And 60,000 are statutory government dues. Okay. Long-term loans and advances include 40,000 loan and the remaining consists of advance to staff rupees 1,10,000. Other non-current assets of 2 lakh consists of capital advances to suppliers. Other current assets include 3,50,000 current assets receivable in cash and prepaid expenses of 50,000. Short-term provisions include dividend payable of 2 lakhs. The dividend payable is as a result of a board meeting wherein the declaration of dividend for X1, X2 was made. However, it is subject to approval of shareholders in the AGM. Okay. What do you do? What do you make out of these adjustments? Why is this information given to you? Yes. Why is this information given? To fill up your space in the question? Yes. Bolo.
These are the adjustments to be made.
What are the nature of these adjustments? What would be the nature of these adjustments? It's a reclassification adjustment. Okay. Sir, what do you mean by reclass? Other current liabilities include 3,90,000 worth to be paid in cash and 60,000 are statutory government dues. Other current liabilities 4,50,000. So this they have given the split 3,90,000 and 60,000. What is this? 3,90,000 to be paid in cash. To be paid in cash means what? It becomes a financial liability. Yes or no?
Yes.
So other financial liabilities. Whereas 60,000 statutory dues. Is statutory due a financial liability? You studied financial instruments. Is it a financial liability?
No.
No. So therefore, this continues to remain under other current liabilities. Yes or no?
Yes.
So this will be adjustment 1. Okay. Next. Long-term loans and advances include 40,000 loan and the remaining amount consists of advances to staff 1,10,000. $40,000, 1,10,000. Yes or no?
Yes.
This is loan, so financial asset. This can be treated as loans and advances. Okay. Choice is yours. Next. Chalo. Other non-current assets of 2 lakhs consists of capital advances to suppliers. Capital advances to suppliers. Is it a financial asset or a non-financial asset? Yeah. Is it a financial asset or a non-financial asset?
Non-financial.
Yes, because it is a capital advance, you will get an asset against that advance and not cash. Okay. Other current assets include 350,000 current assets receivable in cash. So this is financial asset, and 50,000 balance is prepaid. This will be other current assets. Are we okay with this?
Yes.
Yes, ठीक है. So that is all your reclass adjustments. These are all your reclassification adjustments. Next, what are you having? Short-term provisions include dividend payable of 2 lakh. Should I recognize dividend payable?
No.
No. तो आपको उसको रिवर्स करना पड़ेगा. You will have to reverse that. So first one, adjustment number 5. Where is it included? Short-term provisions. That means from here you will have to remove 2 lakhs. So short-term provisions debit 2 lakhs to source would have been retained earnings, so it will go back to retained earnings. Are we okay with this?
Yes.
All right. So this adjustment is also done. Okay, next. The CFO also presented the following information against corresponding items in the balance sheet. PPE consists of a class of assets as office buildings whose carrying amount is 10 lakhs. However, the fair value of the said office building as on the date of transition is estimated to be 15 lakhs. The company wants to follow a revaluation model as its accounting policy in respect of property, plant and equipment for the first annual Ind AS financial statements. Are we okay with this?
Yes.
Yes. So therefore, what will be the adjustment entry for this?
PPA account debit
Yes.
5 lakh.
Yes. 5 lakhs. 2. Retained earnings. Considering they are looking for a policy change, even reval reserve, 5 lakhs. Are we okay with this?
Yes.
Yes. Oh. Next. Typically, you take it against retained earnings. Okay. I mean, that is the safest option. But in many cases, institute has done sometimes retained earnings, sometimes reval reserve. So alternate solutions do exist. Okay. In this case, institute would have taken a position that the policy change is happening, and therefore we will take it to reval. Reval reserve. So they have taken it there, which is also fine. Okay. Next. Number 3. Trade receivables. A is done. B. The fair value of intangible assets as on the date of transition is expected to be 2 lakh 50. However, the management is reluctant to record the fair value changes in the books of account. What do you think? Management is reluctant to incorporate. Is there anything wrong in this? कुछ गलत है क्या?
I think no, it has to be in fair value.
Not necessary, na? Property, plant, equipment, intangible assets, all of these, there is an option to transition at previous gap value. Yes or no?
Yes.
So if they are reluctant, then we'll take the previous gap value. Yes or no?
Yes.
This is where the language confuses the students. Management is reluctant to incorporate, makes us feel that they are doing something wrong. But that is not the case, na? If they are reluctant to incorporate, fine, we take the previous gap value and do the accounting. It is a different class of assets compared to property, plant, and equipment. So it's totally fine for us to take the previous gap value. Okay?
Okay.
Next. Shaurya had acquired 80% in a company, Excel Private Limited, thereby acquiring the control at that time. Shaurya Limited recognized goodwill as per the erstwhile accounting standards by accounting excess of consideration paid over the net assets at the date of acquisition. Fair valuation exercise was not done at the date of acquisition. Okay, so now what do you do? Fair value data was not done at the time of acquisition. This is which case? We did so many cases ना, ये कौन से केस में आता है? Acquired 80% share. So what does this become? Bolo. Does it become business combination?
Yes, business combination.
So for business combination, what is the requirement? You can pick up a date. Yeah, provided you select that option, right? You can go back in time, select a date for restatement and restate effective from that date. Yes?
Yes.
Otherwise, date of transition will be the deemed date of acquisition. Yes or no?
Yes, sir.
In this case, are we given the data for restatement? नहीं दिया आपने को कौन से साल में एक्वायर किया, what were the fair values, all this data is not given. So is there a previous gap value accounting permitted? Answer is yes. So we take a previous gap value. Previous gap value. No data given. No data for restatement. Are we okay with this?
Yes.
ठीक है. Trade receivables include an amount of 20,000 as provision for doubtful debts measured as per previous gap. Now, as per latest estimate using hindsights, the provision needs to be revised to 25,000. What will you do? Will you revise the provision or retain it at 20,000? क्या करोगे? Can I restate at 25 or should I keep it at 20? I will keep it at 20 because 25 is reflecting hindsight bias. Okay. So provision not restated. Provision not restated on transition date. Are we okay with this? Yes, because this is solely at hindsight basis. Okay. Next, company had given a loan of 1 lakh to an entity for the term of 10 years 6 years ago. Transaction costs were incurred separately for this loan. The loan carries an interest rate of 7%. Principal is to be repaid in equal installments over 10 years at the year end. Interest is also payable at each year end. The fair value of the loan as on the date of transition is 50,000 as against the carrying amount of loan, which presently amounts to 40,000. Ind AS 109 mandates to recognize the interest income as per effective interest method after the adjustment of transaction costs. Management says it is a tedious task in the given case to apply the effective interest rate changes with retrospective effect and hence is reluctant to apply the same retrospectively in its first time adoption. What should it do? Should it go for fair valuation or can it continue at previous cap value? 50,000 is your fair value. 40,000 is your carrying amount.
Fair value.
Yes, carrying amount. This is previous cap. Currently, it is at 50,000 fair value. There is no option. You have to go for fair value. So, will I pass an entry? Answer is yes. Adjustment number E. Entry will be, it is a loan given. So, loan account debit 10,000 to retained earnings 10,000. Are we okay with this? Yes?
Yes. Yes.
So D is done, E is done. B, C, D, E. F. In the long-term borrowings, 4,50,000 of the component is due towards the state government. Interest is payable on the government loan at 4%. However, prevailing rate in the market is 8%. Fair value of market loan stands at 4,20,000 on the relevant date. Yes?
Yes. Adjustment entry to be made.
Adjustment entry to be made or not to be made? See, if I have to make an adjustment entry, what data is required? What is the tenure of the loan? Yes or no? That is the basic requirement, right?
Yes.
Yes. Is that data given to us?
No.
No. So then how can I do the fair valuation? How can I do the fair valuation? I cannot do, na? 4,20,000 as on the relevant date. Yes. Relevant date right now based on this data appears to be the transition date. Whereas the government grant requirement is you go back in time when the loan was actually received and then do the working. Yes or no?
Yes. Yes.
This is fair market value on relevant date. I don't need fair market value on date of transition. I need to determine fair market value when the loan was given and then arrive at an amortized cost value on the transition date. Yes or no?
Yes.
That data is not given to me. And in absence of that data, can I follow previous gap value?
Yes.
Sir, but वो loan है, you have to do it at fair value. Answer is no. This is a government assistance. This is a government grant. This is a government loan that is given to us. And the transition guidance of the government loan will override the requirements of your fair value of your financial instrument. Are we okay with this?
Yes.
Yes. So therefore, previous gap value. One minute. Is there an interpretation issue from my side? Yeah. This is again prevailing rate. This is current, not old rate. Are you okay with this? Yes.
Yes.
So for all purposes, even if I take this as the relevant date, means the date when the loan was given, even if I take it that, okay, instead of previous cap value, instead of relevant date, even if I forget, I do not say it is date of transition. Even if I assume that it is the value on that particular date when the loan was given, still I cannot do, because 8% represents current rate and not the previous rate. Are we okay with this? Yes.
Yes.
So fourth one is adjustment. Adjustment number F. The transitory provisions for government loan will override those for regular financial instruments. Hence, fair value option not available. Are we okay with this? Yes.
Yes.
Next. Under previous cap, mutual funds were measured at cost or market value, whichever is lower. Under AS, Ind AS, the company designated them at fair value through P&L. Mutual funds at the previous gap value was 2 lakhs included in current investments. Currently, it is worth 2,30,000. So do I have to do an adjustment? Answer is yes. Yes or no? Yep.
Yes.
Investments debit 30,000 to retained earnings 30,000. Okay. Next. Ignore separate calculation of deferred tax on above adjustments. Assume net deferred tax income to be 50,000 on account of Ind AS transition adjustments. Deferred tax income they have said. So sixth one, adjustment H. Entry will be income, right? So DTA, DTL, whatever it is, debit 50,000. Income will go to retained earnings 50,000. Are we okay with this?
Yes.
They have already given. Prepare transition date balance sheet as per Ind AS. Show necessary explanation which presented by the CFO in the form of notes which may or may not require adjustment as on the date of transition. Yes. So we have done all the adjustments. You have noted it down. Take 10,
Yes.
15 minutes and try to finish the balance sheet. Okay. Let's try to finish the balance sheet. All adjustments we have given, right? So see if
Yes.
you can do the balance sheet.
Okay.
Do the balance sheet. Yeah. Right now. Are you able to follow?
Yes. Yes.
Okay. Do. There is anything, let me know. Are you done?
Not yet.
Okay.
Yes, done.
Done. So did you get the numbers? Is your balance sheet tallied?
I'm getting 93,30,000 as total.
Both the sides?
One side is 93,30,000, second side is 93,50,000. 20,000 difference.
Acha.
हो सकता है.
You
I think
can come to the, you can see, did you get your non-current assets, property, plant, equipment, 25 lakhs? Yes?
yes,
वो 25 है?
yes,
All right. Next. Goodwill at 1 lakh remains at 1 lakh.
yes, yes,
Intangible assets at 2 lakhs. Correct.
yes, correct.
Financial assets, you have investments appearing at 5 lakhs.
Yes,
Yes.
yes.
Loans 50,000. We have done an adjustment now.
1,50,000 was the
Not
earlier
1 lakh
one.
50. It is
Plus,
adjustment number E. Fair value is 50. Previous gap value is 40. So we had taken an adjustment to retained earnings, right?
yes.
You have not considered that?
I took it to retain earnings.
हाँ, but second effect आएगा ना. एक retained earnings में लिया, that is correct. But loan also will increase by 10,000
Yes,
ना?
yes. I increased by 10,000.
अच्छा, so for 50,000 loan लिया आपने. Have you taken?
Yes, yes, yes,
Yes? Okay.
Yes.
Other financial assets 1 lakh 10 as it is, correct?
Yes,
Other non-current assets 2 lakh as it is.
yes,
Inventories 12 lakh 50, same. Now we are coming to current assets. So inventories 12 lakh 50.
yes,
Investments, earlier it was 18 lakhs. Then we did a fair valuation. So it
30,000.
comes to 18 lakh 30,000.
30,000, yes,
Right? Trade receivables, no change, 9 lakhs.
yes,
Cash and cash equivalents, 10 lakhs.
yes,
Other financial assets, 3 lakh 50. This is the current portion that is getting split. If you look at the question, other current assets was 4 lakhs, out of which 3 lakh 50,000 is receivable in cash and 50,000 is prepaid.
yes, yes. Effectively, it remains the same.
Yes, effectively it remains the same, 4 lakhs. So 3 lakh 50 other financial assets and other current assets is at 50,000. Yes or no?
DTA, DTL, yes.
DTA, DTL, we will look at it later because that is appearing in the existing balance sheet, right? As a DTL. So assets is over at this stage. Okay.
Yes.
So if you take the total, it should be 90 lakh 40. Did you take DTA here?
Yes.
No, that you don't take because already DTL is appearing. We will adjust it against that only. Okay. So if you take this total, it comes to 90 lakh 40,000. Correct? Just check.
Yes.
Done?
Yes. Yes. Correct.
Again,
Yes.
90 lakh 40. Okay.
Yes.
Coming to equity and liability, share capital at 10 lakhs. No
Yes.
change. Other equity, that is your basically reserves. What was the value before? 25 lakhs. Correct?
25 lakhs. Yes.
And now
Then
how much it is
retained
coming to?
earnings added by 7,90,000.
Correct. So 32 lakh 90. Correct?
Yes.
You got that 7 lakh 90, na?
Yes. Yes. Yes.
Okay.
7,90,000.
Then financial liabilities, you have borrowings
40,000.
appearing at 450. Provisions
Yes.
appearing at 350. No change.
Yes.
Deferred tax liability was 3 lakh 50. Then we did an adjustment of 50,000.
Okay.
Debit.
We will adjust here. Yes.
Yes. So 3 lakh 50 will become 3 lakhs.
Minus 50,000.
Yes.
Yes.
Trade payables 22 lakhs. Other
Yes.
financial liabilities 3 lakh 90. Other current liabilities 60. That 450
60,000.
basically they are
4
split.
lakh 50.
Yes.
Yes.
And provisions at 10 lakhs. 12 minus 2. Because proposed dividend was there, na, which we reduced.
Yes.
First
Yes. Yes.
entry. So 12 minus 2, 10. So if you do this, you will get the same value.
Right. Right. Now got it. Yes.
Got it? You had skipped out this short-term provisions, sir.
Yes. Yes.
Okay. Oh. Okay. So that is a very comprehensive question that you could get what we have seen right now in terms of Ind AS 101. Quite a comprehensive one. Okay.
Yes.
All right. Fine. So that takes care of illustration 17. Okay. Complete. Okay. Anything else? No. I think illustrations we have completed everything, right? Seventeen, 16. 15, 14, 13, 12, 9. Okay. These are small questions, 10 and 11. 8, 7, 6, 5, 4 also we have done. 4, 3, 2 also we had done. 1. So I think, yeah, from your study module, test your knowledge. We have done all the questions. We have done all the illustrations, barring 1 or 2 small ones. Okay, those are just theory questions you can rush through. But otherwise, from your study material, everything is over as far as this chapter is concerned. Okay?
Okay. Okay.
All right. Okay. Now, would you like to do the balance sheet of illustration 16, which I gave yesterday for homework?
Yes. Yes.
Do it right now. Okay, do it right now. So then, that completes it up. Then I'm having three questions from RTP. Once you prepare that balance sheet, we take a break. Then we take those RTP questions. They're small questions. उसके बाद then we can close the session. We'll do some MCQs and close the session. Okay. Done?
No, not yet.
Okay.
Yeah, done. I'm getting the difference in the balances. Liability side, I'm getting 2,669,8,000. and asset sides 21599,000.
Hello.
Yeah, yes, done.
Yeah. Okay. So property, plant, equipment, 1 crore 30 lakhs, and
1
land
crore 30 lakh plus
4 lakh
4 lakh
50.
50,000. Yes,
Okay. So that is correct. Inventory 8 lakhs, no change. Correct.
yes, yes,
Investment in S Limited 68 lakhs. We had done a fair valuation. It was 48, it became 68, right?
yes, 40 plus. Yes,
You missed this
I
out.
took 20, no, I took 20 lakhs. I did not take 48 lakhs. 48 lakhs. I
You
have to, yeah,
forgot the main amount.
yes,
Trade receivable 2 lakhs.
yes.
Cash 49,000.
Cash 49,000, yes.
And other current assets 50 lakhs.
50 lakhs, yes.
So this closes your asset side.
And foreign currency translation
वो
reserve, how much?
रिजर्व में जाएगा ना. We'll come to the reserve.
Okay, yes,
Yes.
yes,
So this is your assets, liabilities and share capital. You have share capital 1.3 crores.
yes,
Cumulative translation difference, that FCTR, we removed it 1 lakh. We reset it to 0, right? So it
yes,
was 1 lakh. Now it will become 0. Okay.
right, yes,
ESOP, it was the reserve was 20,000. We did an adjustment for unvested options of
1,000.
1,000. So 20 becomes 21.
Yes, yes,
Okay. Retained earnings, there is an adjustment of 20 lakh 99,000. Yes.
yes, 20 lakh 99.
You got that?
Yes,
Okay. And 1 lakh
22
79,
78,000. I got 22 78.
2278 you got. Okay. So
Yes,
that closes reserves.
yes,
Deferral loan, VAT, 37 lakh 25 528.
yes, we bifurcated, yes,
Bifurcated. Deferred government grant 2274 472. Correct?
I got it.
And remaining current liabilities and provisions are the same, 30 lakh, 8 lakh, 12
8
lakh.
lakh, yes.
So if you take this total, 262 99,000.
Now, yeah, now corrected.
Okay, fine.
Yes, yes.
So that's okay for now. So module, everything is done. We have 3 questions from RTP. We'll pick it up after the break. Okay, you take a 15-minute break. We shall resume after 15 minutes. Okay,
Okay.
all right. Break, please. Break. that, we are done with the study material. Okay. So in totality, all done. We now come to two RTPs where you have questions. Again, questions look big, but in fact, the solutions are just, small solutions. So I think you should be able to solve it as we read. Okay. So, Sanjay, you are there?
Yes.
Okay. So this is your May 2021 RTP. Him Limited, having a net worth of 250 crores, is required to adopt Ind AS from 1st April 20X2 as per the Indian Accounting Standard Rules 2015. Rahul, the senior manager of Him Limited, has identified the following issues which need the specific attention of the CFO so that the opening balance sheet can be prepared as on the date of transition. Issue 1. As part of property, plant and equipment, the company has elected to measure land at its fair value. Okay, elected to measure land at fair value, wants to use this fair value as the cost on the date of transition. The carrying value of the land was 5 lakhs. The land was acquired for a consideration of 5 lakhs. The fair value of the land was 8 lakhs. Can they do that? Can they opt for fair valuation on the date of
Yes.
transition? Yes.
Yes.
So what will be the journal entry?
PP account debit
Yes. So land
3
account
lakhs.
debit to
Retained earnings.
retained earnings. 3 lakhs. Okay. So this is the journal entry. It is permissible. So under AS 10, you would be recognizing it at cost. In Ind AS, you would be showing it at fair value. Impact would be a 3 lakh appreciation of property with a corresponding credit to your retained earnings. Okay, next. Under Ind AS, the company has designated mutual funds as FVTPL, fair value through P&L. The value of mutual funds as per previous gap was 4 lakhs. The fair value on the date of transition was 5 lakhs. So what entry to pass? Can I do that? 4 lakh to 5 lakhs.
Yes.
Yes. So entry will be
Investment account debit to retained earnings.
Retained earnings. I told you it's a very small. Solutions are small, only question is big. So under AS, you would measure investments at lower of cost or market value. Whereas here you will be booking it at fair value, but you have an option for investment in associates, subsidiaries, and joint venture to book them at cost. It's an option again. Okay. So here they have elected for this, and therefore they have taken it to the P&L. Okay. So that is one thing which you can do. Next. Company has taken a loan from another entity. It has taken a loan. The loan carries an interest of 7% and it had incurred certain transaction costs while obtaining the same. It was carried at cost on initial recognition. The principal amount is to be repaid in equal installments over the period of the loan. Interest is also payable at each year end. The fair value of the loan as on the date of transition is 1,80,000 as against the carrying amount of the loan, which presently equals 2 lakhs. So what do you do?
Divide it into financial liabilities and equity
bring it to
component.
fair value.
Yes.
So 2 lakh fair value is 1,80,000. So entry will be loan account debit 20,000 to retained earnings. Correct? Yes or no?
Yes.
All right. So that is done. Next. The company had declared a dividend of 30,000 for last financial year. On the transition date, the dividend is already deducted by the accountant from reserves and the dividend payable has been grouped under provisions. The dividend was only declared by the board at that time and it was not approved in the AGM. However, subsequently the meeting was held, it was ratified by the shareholders. Should I show the dividend as a liability? Answer is no.
No, no.
So therefore you will have to remove that. So entry will be dividend payable debit. How much is that? 30,000 to retained earnings. Yes? Yes or no?
Yes, yes.
30,000. Fine. The company had acquired intangible assets as trademarks amounting to 250,000. The company assumes to have an indefinite life for these assets. Indefinite life, not infinite. The fair value of the intangible assets as on the date of transition was rupees 3 lakhs. However, the company wants to carry it at 2,50,000 only. So what do you do? Can I take it at 2,50,000?
No, it should be fair value.
No. Why we get confused? Property, plant, equipment, intangible assets, you always have an exemption to opt for previous GAAP value. Yes or no?
Yes, yes.
So you can take it at 2,50,000. Only one difference is there. Under AS, even assets with indefinite value, you amortize it over a 10-year period. Whereas for Ind AS, assets with an indefinite life, you test it annually for impairment. Okay, so here no entry. You can continue to record it at 2,50,000. Are we okay with this?
Yes, yes.
Okay. After consideration of all the possible effects, the deferred tax impact is computed as 25,000. This will increase the portion of DTL. There is no requirement to carry out the separate calculation of deferred tax. So it increases the DTL. So to DTL 25,000, that means debit will be retained earnings. Yes or no?
Yes.
So that takes care of this question. Management wants to know the impact of Ind AS. We have explained. Prepare an Ind AS impact analysis report where you are required to discuss the differences between earlier GAAP, Ind AS for preparation of transition and also pass journal entry for each issue. Are we okay with this? Yes?
Yes. Yes.
Fairly simple, no doubts. Okay. So that takes care of this question. Okay, next. Shall we proceed further?
Yes.
Okay. Okay. 1 second. Fresh Vegetables Limited was incorporated on 2nd April 20X1 under the provisions of Companies Act to carry on wholesale trading in vegetables. As per the audited accounts for the financial year 31st March 20X7, its net worth for the first time exceeded 250 crore. The financial statements since inception till 31st March 20X6 were prepared as per the GAAP provisions. It has been advised that henceforth it should prepare its financials in line with companies rules 2015. That is, they have to converge to Ind AS. The following additional information is provided by the company. FVL has in financial year X2, X3 entered into a 60-40 partnership with Logistics Limited and incorporated a partnership firm, Vegetable Logistics Associates, to carry on the logistics business from farm to the market. Okay, from farm to the market. FVL also has an associate company Social Welfare Limited, that was incorporated in July 20x5 as a charitable organization and registered under Section 8. Social Welfare has been the associate of FVL since its incorporation. Examine the applicability of Ind AS on VLA and SWL. Okay. So now it has entered into a partnership with a logistics company. Okay, it has entered into a partnership with a logistics company to carry on the logistics business from farm to the market. Okay. Now, when it has entered into partnership, what is the nature of partnership? Is it a joint arrangement or is it a joint venture? A joint venture means a joint venture, or rather, is it a joint operation or a joint venture? Okay. So a joint venture means you create a separate entity. You typically create a separate entity and you get stakes in that. You take some 60% stake, other party takes 40% or opposite. Okay. It is like there is a company that is running this. So if it is a separate joint venture, where they are having interests in the equity of the company, then Ind AS will be applicable to such company. Okay, then Ind AS would be applicable to such company. Are we okay? So they are having interest in the net assets of that company. Are you able to follow?
Yes, sir.
But suppose they join hands without forming a separate legal entity, so to speak. If they form, suppose, a partnership firm, is a partnership firm a separate legal entity from its partners?
No.
No. Partners and partnership firm are one and the same.
Same.
So
Yes.
when they form a partnership firm to carry on the operations, there is no distinction. The partners are interested in the assets and the obligations. The partners are interested in the assets and are liable for the obligations. So in such a case, Ind AS would not be applicable since it is a joint operation and not a joint venture. Did you follow?
Yes. Yes.
So for a interest in a joint operation, it will be interest in assets and liable for obligations. Whereas in the case of a joint venture, it will be interest in the net assets. Are we okay with this?
Yes.
Yes. So first case, partnership firm, joint operations, Ind AS not applicable. Second case, joint venture, separate legal status, Ind AS is applicable. Okay. FVL also has an associate company, Social Welfare Limited, that was incorporated. So now I'm having an associate, a separate legal entity. It is engaged in charitable activities. So what? Ind AS will still continue to be applicable even though it is a charitable organization, because it is an associate of a company to which Ind AS is applicable. Are we okay with this?
Yes, right.
Yes, so that takes care of this. Then we move on to the last question. Completing so fast. Okay. Again, this is theoretical in nature, nothing specific. GG Limited, a listed company, prepares its first Ind AS financial statements for the year ending 31st March 20x3. The date of transition is 1st April 20x1. The functional and presentation currency is the rupee. The financial statements as at and for the year ended 31st March 20x3 contains an explicit and unreserved statement of compliance with Ind AS. Previously, it was using Indian GAAP as the base, that is the AS. Okay. It has already published its first interim results for quarter 1, 2, and 3 of X2, X3 in accordance with Ind AS 34 and 101. The interim financial report include the reconciliations both of total comprehensive income and of equity that are required by Ind AS 101. Since issuing the interim financial report, the management has concluded that one of the accounting policies applied at the interim should be changed for the full year. How should GG Limited deal with the change in accounting policy under the Ind AS framework? What do you think?
changes are to be made quarterly basis, then for the final financial statements, the changes can be taken for the full year then.
See, they move to Ind AS, X2, X3 is the first year. Yes or no?
Yes.
Now they have submitted the results, published the results for Q1, Q2, and Q3. Okay?
Yes.
Correct? They have already published the first interim results. Now, since issuing the interim financial report, its management has concluded that one of the policies applied at interim should be changed for the full year. Is it acceptable? Is it acceptable?
No. No.
No. The same accounting policies that are applied for quarterly financials should also be applied for the balance sheet. Should also be applied for the balance sheet. Are we okay with this?
Yes.
Yes. So, one second. Just look at what is written. See, the first Ind AS financial statements are prepared in line with specific requirements of 101. Yes. Subject to certain exemptions and exceptions, Para 7 requires the entity use the same accounting policies in its opening Ind AS balance sheet as well as all throughout the periods presented. This overrides Ind AS 8 requirements for disclosures about changes in accounting policies do not apply in the first Ind AS financial statements. Okay, GG should include an explanation of the change in policy that it has made since the interim financial report in the notes to annual financial statements in accordance with Para 27A. The disclosure note is likely to include information similar to what Ind AS 8 would otherwise require to help users of financial statements understand the decisions that have been made. Entity should also ensure that reconciliations of total comprehensive income and equity presented in the first Ind AS financial statements are updated from those included in the interim to reflect the amended accounting policy. Are we okay with this?
Yes, I was also thinking on the lines of India's 8 only.
Acha. Okay. Fine. So in that sense, yeah. So this was one question which was there, which was just a simple question. Yeah. So with that, I think Ind AS 101 is complete in all respects. Okay. We have nothing major left. Okay. Any doubts that we have on Ind AS 101?
No.
No
Just,
doubt.
yeah, now I have revised only, and that's all.
Okay. Whatever standards we have been discussing so far, do we have any doubts? Like I have covered with you. One second. We have discussed Ind AS 19, Ind AS 21, Ind AS 102, Ind AS 113. Do we have any doubts in the standards?
No.
No. Okay, when is your exam? You're answering this May attempt, huh?
Yes.
Okay. और आप हो कहाँ से?
I'm in Noida at the
You are
moment.
based out of Noida. Acha. Okay. So that is where the board of studies is there, right?
Yes.
Acha. Okay.
It's not far away from my place.
Acha, not far away from your place. Acha. Okay. So 101, let me just do one thing. I just pulled up some MCQs. Let us just see if you can get that right. 5-6 MCQs are there, not much. It's largely Is the screen visible?
Yes.
Okay. So here are your questions. Oh. All right. Ind AS 101 applies when an entity changes accounting policies, prepares financial statements. What do you think?
Prepares financial statements under Ind AS for the first time.
Yes. Okay, this is right. Question 2.
Option C.
Option C. Yes. See, you tend to get confused between A and C. Actually,
Yes.
both are meaning the same thing, but C contains an additional requirement which is mandatory under Ind AS 101. That is an explicit and unreserved statement of compliance with Ind AS. So that is why C is a better fit than A. So C should be the right one. Okay,
Yes,
next.
you had already explained that it should be
Yes,
explicit and unreserved statement.
explicit
That's
and
it.
unreserved. You may disagree with the auditor. That also we had discussed, right?
Yes, yes, yes.
There may be some treatment जहाँ पे auditor will have a particular view and you will have a particular view. If that be the case, auditor is always free to qualify his audit report to that extent. Okay, but that will not make the financials non-compliant with Ind AS. Okay, as long as
Yes.
your interpretation, you have sufficient evidence backing it. Okay. So generally, it doesn't happen कि auditor and the auditee continue to remain at variance with each other, because generally qualifications and all are not easy to explain and not desired in financial statements. Okay. So come to question 3.
Option D.
Option D. Yes. P&L तो नहीं जाएगा for the obvious reason. You cannot manufacture P&L in the finance room. Okay. You cannot manufacture profits through book entries. So A will not be true. B also, it will not go to the OCI. We don't create any special transition reserves. Whatever is there goes in retained earnings, or if there is any other component of equity. Like for example, when we talk about property, plant, equipment getting revalued. Okay. See, Institute has given a plethora of reserves. Okay, in some questions, it has taken the revaluation to retained earnings. In some cases, it has taken to revaluation reserve. In some cases, it has taken to fair value reserve. The substratum of all this is only one. That revaluation, you should not take it to the P&L. It should form part of other equity. That is the substratum. So therefore, in your answers, when you present, you can take the movement to retained earnings, but please mention an alternative that alternatively the effect has been could be taken to XYZ reserves. Okay, so that will give you an edge when your books are being examined, that the candidate knows that alternative solutions do exist. Okay, it's a matter of just giving your position to the examiner. Estimates under Ind AS 101, what should it be?
Can be revised using hindsight.
You can't revise using hindsight. Now, that is what is the required. I told you, I made a provision for 2 lakhs. Actual bad debt is 350. So when I'm doing an Ind AS retrospective restatement, can I take 3 lakh 50 as bad debt? No, that is hindsight. That you cannot do. So estimates under Ind AS 1 cannot be revised using hindsight. आपको hindsight समझ में आ गया ना? Yes?
Yes, I think yes.
नहीं, कहीं पे if you are stuck somewhere, let me know. एक बार फिर से
He
बताओ.
said that making an estimate reflecting the conditions at the relevant date. If the evidence of error is there, then we can take it.
कहाँ पे आप क्या पढ़ रहे हो?
I have written down notes.
अच्छा, एक मिनट. Something what I have written.
Yes, yes.
1 minute. Let me open it up.
Estimates required by previous gap. The chart you made.
एक मिनट. Let me open it. हाँ. Make an estimate reflecting the conditions at the relevant date without hindsight bias. Right?
Yes, yes.
वो वाला बोल रहे हो ना?
Yes.
Hindsight bias समझ में आ गया हमको? What is hindsight bias?
I think I have not understood it properly.
अच्छा, तो I will explain it to you. Okay? Don't hesitate to say if you have not understood. Okay? See. See, suppose there is a provision for depreciation, provision for doubtful debts. Okay? I am on financial year 24-25 is the first year Ind AS will be applicable. Right? This is the first year Ind AS will be applicable. Okay. Okay. 23. Correct?
Yes, yes.
Now, suppose that when you were preparing the balance sheet for 22-23, you had made a provision for doubtful debts worth 2 lakhs. Okay? Correct?
Yes, sir.
That means you thought that I will not receive 2 lakh rupees from my receivables. Rest all I will receive.
Yes.
Correct? So you made a provision of 2 lakhs. When you were preparing 22-23 balance sheet. Okay? Then 23-24 aa gaya. Okay? Now forget Ind AS. For now, don't think of 24-25. When you are preparing 23 and 24, tell me one thing. What am I going to consider? This 3,50,000 is my actual bad debt. I made a provision of 2 lakhs. What do I consider this? Do I consider it as an error or do I consider it as a change in estimate?
Change in estimate.
Change in estimate आप अगर consider करोगे, so you will hit the bad debts in the P&L in 23-24 with 1,50,000.
Yes.
Did you understand?
Understood.
So मैंने 2 लाख प्रोविजन बनाया. एक्चुअल बैड डेट वंस 3.5 लाख. सो 3.5 के अगेंस्ट 2 लाख प्रोविजन में एडजस्ट हो गया. 1.5 लाख हिट्स द P&L. करेक्ट?
Yes.
अच्छा. नाउ 1 साल बाद Ind AS इज एप्लीकेबल. ओके?
Yes.
मैंने क्या बोला? Ind AS इज एन अपॉर्चुनिटी टू क्लीन अप ऑल योर सिंस ऑफ द पास्ट. जो कुछ भी गड़बड़, जो कुछ भी फाइनेंशियल्स में चीजें आपको चेंज करनी है, मॉडिफाई करनी है, यू वांट टू पुट अ न्यू पॉलिसी, you want to do a different measurement system from cost to fair value, all that can be done at your point of transition. Is it okay?
Yes, yes.
तो जो अकाउंटेंट बैठा है वो बोला तो ठीक है ना, मैं इसको एस्टिमेट के लिए भी यूज कर लूंगा. सो देयरफॉर वो क्या बोलेगा? आई एम प्रिपेयरिंग 31st March 25 बैलेंस शीट. राइट? I know one thing for sure. My actual bad debt is 3,50,000. Yes or no?
Yes.
तो मैं क्या करता हूं? 3,50,000 I will take it as the opening provision. Yes or no?
Yes.
वो यही बोलेगा and he will say I will not hit the P&L in 23-24. Is it okay?
Yes, sir.
Yes.
Yes.
Abhi, why is he wanting to take 3,50,000 as opening provision? He does not want to show the P&L getting impacted by 1,50,000. Are you able to understand?
Yes, yes.
Yes.
Yes, right.
Because hitting the P&L makes things very clear and it will raise uncomfortable questions. ये पैसा क्यों नहीं आया? आपने सिर्फ 2 लाख एस्टिमेट किया, 1.5 लाख एक्स्ट्रा कैसे नहीं आया? Who was the reason? 1, 2, 3, 4. So like that you'll have so many questions coming up. तो इससे अच्छा वो क्या सोचा, मुझे पता है 3,50,000 is my bad debt, so I will make a provision opening for 3,50,000. Are you able to follow?
Yes, yes. Yes.
इसको हम लोग बोलते हैं, मुझे कब पता चला? आफ्टर 31st March 24 got over. Yes or no?
Yes, yes.
So today I am getting to know something of the past because of the sight that I could have. Sight मतलब मैं देख पा रहा हूं क्या हुआ है, right?
Yes, sir.
I am able to see something which happened in the past. Past का एक और English word is hind, Hind,
Yes, sir. That I
back side.
understand.
Okay, तो hindsight, ठीक है, तो 3.5 लाख का मुझे हाइंडसाइट में प्रोविजन लेना है. क्या मैं ले सकता हूं ये प्रोविजन ऑन 1/4/23? सो एज पर दिस पर्सन, एज पर दिस कंपनी, ऑन when they are converging, they want to pass this entry. Which entry? To provision for doubtful debts, retained earnings, 1,50,000. This is the entry that they want to pass. Are you able to
Yes,
follow?
yes. Got it. Yes.
This, the standard says, is not acceptable.
Okay, okay,
Okay?
okay.
Because this is not based on Ind AS. This is based on facts which were not visible on 1st April 2023. You were not an astrologer to assume that 1,50,000 would hit you in 23-24. Today also you are not an astrologer. You have seen the things going from bad to worse. That is why you are wanting to conceal it in retained earnings. Did you understand?
Yes, yes.
So therefore, change in estimate based on hindsight is not permitted. Is
Yes.
it okay?
Now understood
All
clearly.
understood? Achha.
Yes.
So now we come back to that question. Okay. Now you tell me.
It must be consistent with the estimates under previous gap.
Yes, must be consistent with estimates under the previous gap. Is it okay?
Yes, yes. Now clearly
Yes.
understood. Yes.
All right. Now number 5. What do you think?
We have an option for the retrospective restatement from a particular date, or we can.
देखो, exemption मतलब something is made easy for you, right?
Yes.
What did I explain? Business combination. You can select a date after which you will have to do a business combination of all combinations that you have acquired after that date. Yes or no?
Yes, yes.
Alternatively, you also have the option to take the date of transition as the deemed date of acquisition. Yes or no?
Yes, yes.
So
Yes.
that is the exemption that business combination accounting you get. Okay. So what does it mean in these four options? What is the easiest to apply from the date of transition onwards? Yes or no?
Yes.
So can I say that it is
Apply Ind AS
prospective?
103 prospectively. Yes.
Prospectively. Because restating all past business combination is a very difficult activity and इसमें exemption है ही नहीं फिर. You are choosing to do the full-fledged, full-blown adoption
Yes.
by restating everything that happened in the past. Do that. If you want to do that, please do that. But in that case, that is what you would do even if Ind AS 101 was not there. Yes or no?
Yes. Yes.
Ind AS 101 is there. That is why you can apply Ind AS 103 prospectively. Are we okay with this?
Yes. Yes.
Yes. Now come on to the last question.
We have two options: retrospectively restate or reset to zero.
Retrospectively restate, yes, or reset to zero. Yes. So out of these options, which one is correct?
Reset cumulative translation differences to zero.
Yes, this is right. Okay. You can never carry forward. Previous gap value will never work for FCTR. FCTR cannot go to the P&L. FCTR goes to reserves, but it is not a reclassification. It is a reset. Okay.
Okay. Yes.
Yes. So that those MCQs just to keep you informed. All right. So that is done. Next. All right. So that closes it. Okay. 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 Okay, let me see. I think one or two questions I told you to do. We might as well do it since we have time. Is it possible for an entity to allocate cost as per the previous gap to a component based on its fair value on the date of transition, even when it does not have the component-wise historical cost? Okay. Yes. Did you understand the question? Question समझ में आया क्या?
I'm reading question again.
Yes.
Yes. Yes. Got it.
You understood?
Yes. Yes.
Sure.
Yes. Yes.
Typically, like consider an aircraft. You did not do a component accounting under AS 10. You treated aircraft as one single unit. Under Ind AS 16, you end up doing a component accounting. So now you know the overall cost. You know the overall cost And now you have to allocate it to different components. Abhi component ka individual cost you don't have, right?
Yeah.
So therefore, I will find out the components on the date of transition and determine its fair value. And then I will do the allocation of that cost based on this fair value. Is it okay?
Yes.
Yes, so
Okay.
that is that question. Next, revaluation under previous gap can be considered as deemed cost if the revaluation was at the date of revaluation broadly comparable to fair value or cost or depreciated cost of assets in accordance with Ind AS, adjusted to reflect example changes in a general or specific price index. What is the acceptable time of such revaluation from the date of transition? Can adjustments be made to take effect of events subsequent to revaluation? Yeah. Go through this question.
Just read.
समझ में आया?
Not completely, no.
Okay. See, previous gap had an option for revaluation. AS10 allowed revaluation of
Yes.
assets. Yes.
Yes.
So
Yes.
what they are saying is revaluation under previous gap can be considered as deemed cost. Yes.
Yes.
Because previous cost is the cost for Ind AS 101. That means revaluation, if I did previously, that would be my cost. Yes or no?
Yes.
Can be considered as deemed cost if the revaluation was at the date of revaluation, if the revaluation was comparable to fair value or cost or depreciated cost of assets in accordance with Ind AS, adjusted to reflect changes in a general or specific price index. Are you able to follow?
This
Yes.
fair value I understood, and cost or depreciated cost
See,
of assets.
whenever you do your fair valuation, whenever you do your revaluation, okay, okay, let me see how best to explain this. Just a second. Okay, so you can look at it this way. Okay, see, normally when you are moving in from gap to Ind AS for property, plant and equipment, okay, what you should do, you would normally take it at carrying amount. Yes or no? That is the previous cost value. है कि नहीं? Yes.
Yes.
Unless we choose the revaluation model. If I choose the revaluation, then I go into the revaluation model, but otherwise we normally take the carrying amount. Okay.
Yes, sir.
All right. Now, if I have to go back in time and reconstruct the historical cost, then that would amount to be very tedious exercise, because you have to go back in time, look at all the invoices and do the actual construction of cost. Yes or no?
Yes.
So therefore, you are having an exemption called as deemed cost under property, plant and equipment. What is deemed cost? It is a substituted cost which is treated as if it was the original historical cost under Ind AS. Yes or no?
Yes.
Yes, वो करते थे हम. You have that exemption, deemed cost exemption.
Yes.
Whatever is the carrying value under AS will be deemed to be the opening carrying value under Ind AS. Yes. So
Yes, sir.
you just freeze the AS value and bring it under Ind AS. You don't have to go back in time and calculate everything invoice wise. Yes or no?
Yes.
Now, that is exactly what this is saying. Now, was a revaluation permissible under previous GAAP? Yes,
Yes.
it was
Yes.
permissible. But is any revaluation acceptable? Answer is no. It should be reasonably close to fair value or the cost. Okay, now previously, how did I used to do my fair value? How did I used to do my revaluation? I would normally match it to the fair value. Yes or no? I would normally match
Yes.
it to the fair value, or I would match it to cost of depreciated cost of assets. Okay, I would take the market value, depreciate it for whatever years is the life, and then I would do the revaluation. Yes or no?
Yes.
Did you understand that second part?
Yes, sir.
For example, I have a phone. Okay, this phone, there are two ways in which I can find out the fair value of this. Suppose I purchased this for, let us say, 50,000 rupees. Okay. And then I went on doing depreciation. Now 50,000 has come to, let us say, 10,000 rupees. Now I want to go for revaluation. If I want to revalue this phone, I can take it in the market. Yes. And
Yes.
find out what is the fair value of this. So they will say, sir, 10,000 hai, aapko 8,000 mein you can get it. So then 8,000, which is close to your fair value, becomes an acceptable revaluation figure under previous GAAP. Yes or no?
Yes.
Or if this is not available, then what you can do is you can take this phone, same model, what is the price today in the market? Let us suppose it is 70,000 rupees. And the life of this phone which I have used is 4 years. So 70,000 current value minus 4 years depreciation. That is also another benchmark for you to identify the fair value. Yes or no?
Yes.
पहला था सीधा सीधा मार्केट में बेचने का वैल्यू कितना है. दूसरा है मेरे को बेचने का वैल्यू मिल नहीं रहा बिकॉज दिस फोन इज नॉट ट्रेडेड सो ऑफन. So in that case, I can take the current market value of this phone, depreciate it over 3-4 years, whatever it is, and arrive at the replacement kind of a value. And that could be a value for doing your revaluation under previous GAAP. Yes or no?
Yes.
Yes. Or you can do it based on changes in a general or a specific price index. Okay. This phone, when you purchased, the price index was, let us suppose, 100. Today, the price index is, let us suppose, 125. So do a cross multiplication, arrive at the value. The value will be 25% more than what you purchased and depreciate that. Yes, so these are 2-3 mechanisms which is given in the question. Your revaluation, if long as it falls in any one or two of these categories, it becomes an accepted revaluation. Are you able to follow?
Yes.
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 So any revaluation will not be accepted blindly. It has to have some economic substance, some economic weightage. Are we able to follow?
Yes. Yes.
Now, what is the acceptable time gap of such revaluation from the date of transition? Transition के बाद when do I need to do the revaluation? And can adjustments be made to take effects of events subsequent to revaluation? Yes. Adjustment should be made to reflect material events subsequent to revaluation. You can take that into consideration. However, generally a period of 2 to 3 years may be treated as an acceptable time gap from the date of transition. Are you able to follow now?
Yes. Yes.
Yes, समझ में आ गया?
Yes.
Sure.
Sure. Yes.
Okay, fine. So that is that question. Okay. All right, fine. Illustration.
Shouldn't we take this revaluation, this figure as on date of transition? Why 2 to 3 years down the line?
No, what they are saying is after transition, how frequently should I do the revaluation? Okay.
Okay.
On
Okay.
transition, you will take previous gap value. No
Okay.
doubt. After
Okay.
that, what will be? There are no specific guidelines to indicate acceptable time gap of the revaluation from the date of transition. So you exercise judgment. Normally 2 to 3 periods, 2 to 3 years onwards, you will take it as the date of transition. Are you able to follow?
Yes. Yes.
Yes. In
No,
any
got it.
case, okay, fine. So that takes care of this question also. Okay, fine. So that is done. All of it is done. Yes. Any doubts that you have?
No, clear.
The standard, other standards,
No, no, not as of now.
not others. Okay, okay. So you're answering both the groups.
I will try. Yes.
Acha. Okay, okay. Your articleship is over or it is still going on?
Yes, still some
अभी
period
चल रहा
left.
है. अच्छा अच्छा अच्छा. Okay, 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 fine. So, anyways, that's it from my side. If you have anything, let me know. Otherwise, yeah, we can wind up. It's almost just 15 minutes more left. Anything is there, or we can wind it up?
No, thanks. Thanks a
Thank
lot.
you. Thanks.
Those,
Okay. Please do share your feedback with the Board of Studies. If there is anything that you think you have anything in mind for suggestions.
no, no, nothing. You're doing great.
नहीं ऐसी
Uh,
बात नहीं है. It's not about that. It's just that uh, if there is some way where we can reach out better to you, or be available for you as the institute supporting their students, you need not tell me here. You can send your feedback also to the board for all the faculty members. So the department also keeps track of the feedback, and they do tell us that some student has said, they don't give the name of the student, but they always say that you can try this method. You can, student wants more questions to be solved in class. Like one of the feedbacks when we were having revisionary classes, one of the students, I don't know who it is, but I got a message from the board of studies that when you're doing revisionary classes, do not just solve the questions. You give a background to the standard, what you are solving, and then you solve. Though it takes a little amount of time, I think the student will prefer that. So, the concept gets refreshed. So, if you have any such suggestion in mind, any such thing in mind, please be very open and tell the institute. Okay, and you can always reach the institute for any doubts, any queries that you have. Even though now I think by end of this month, probably your financial reporting gets over, right?
yes, yes. Almost every subject gets over.
अच्छा सारे subjects खत्म हो गए. Very nice. So I think you have Feb, March, April, close to 3 months undisturbed. Okay, so at that point of time also, if you believe that you have some doubts or you're stuck somewhere, you please let us know. You please let the board of studies know. They will surely let us know what difficulties you students are facing. And maybe if there is a revisionary session planned, I don't know, we could probably be doing that, right? to attend to your issues. Okay?
Okay.
Yes. All right then. Thanks a lot, Sanjay. See you on
Thank-
now. Our next session is on 22nd, right?
Right.
Yes. अभी तो वो दो जो चीजें हैं that is not at all related to any Ind AS. Those are very general chapters. Okay.
Okay.
So
Okay.
that is why I think one is ethics and the other is analysis of financial statements. Okay. So again, those are also very routine, different chapters. Okay. All right. So with that, we concluded then. Okay. Yes.
Yes. Yes. Okay. Yeah,
Okay.
but you explained very clearly everything. You
Okay, Sanjay. Thanks so much.
made it possible so that I can understand completely.
That is the
You
reason. I
repeated
mean,
for me as well.
yes, you
Thanks a
don't have
lot
to
for
hesitate. I mean, that is your right to ask as a student. You can ask the same thing as many times as you want till it gets cleared for you. Okay, you don't really have to hesitate. Nobody has to hesitate, actually. There's no need to hesitate. Okay, you are here to learn and we are here to help you understand things. Okay, yes.
Thanks a lot for that.
Thank you, Sanjay. Yes.
Thank you. Thank you.
Okay, sir, session concluded. Yes, yes, yes. Thank you. Thank you. Thanks.